Welcome to Dr. Fred Markets. This is not financial advice. The gap between those who understand finance and those who don't is growing every year. Markets, crypto, artificial intelligence, they just require attention. You showed up today. You're on the right side of that gap. Let's make it count. Let's go.
Retirement is now a hot potato nobody wants to hold. Signal 1. While everyone doom-scrolls politics, the boring S&P dividend yield sits around 1.3%, below inflation, yet boomers keep stuffing cash into broad indexes like it's still 1995, and bonds still pay real interest. Your safe retirement tracker is just a slow leak in a fancy wrapper. Signal 2. If you flip the market upside down and look at the least loved corner, boring, unfashionable dividend stocks, you find something weird. A bunch of high-quality companies quietly spitting out 3 to 6% yields, increasing payouts every year, and trading at lower valuations than the headline index that just dropped 0.7% today. That's not vibes, that's math. Signal 3. Behind the scenes, the rich are doing something very different from the buy the index, shut up, retire at 65 sermon. They're using private credit funds and even damn whiskey barrels as income machines. Predictable cash flow, real collateral, and returns that don't care if Nvidia pukes 3.6% in a day. When wine and bourbon start showing up in portfolio reports, you know the game changed. Here's the tension. Politicians and TV heads fight over who cares about the middle class, but the only real divide that matters is this. Are you building cash flow, or are you just praying your pile of numbers goes up faster than your knees wear out? A.J. Brown says his knees are fine. Your retirement knees are not. Now, let's stitch this mess together. Tariffs, election chaos, headlines about banks locking down and guys barricading themselves inside branches. The narrative screams danger. But danger for who? For people relying on capital gains and vibes. Dividends and real-world cash flow assets don't care nearly as much about daily mood swings. They care about contracts, customers, and barrels aging in a warehouse. Look at today's tape. S&P red, Nvidia redder, JPM flat. Translation: the market is telling you the AI party is crowded, the mega cap trade is tired, and the safest feeling stuff is maybe not where your future rent money should come from. Dividend investors are effectively saying, fine, you kids chase 10x, I'll take 4% plus growth and sleep at night. Meanwhile, in the shadows, quiet asset classes like wine and whiskey are behaving like private little dividend machines. No, you don't drink them. You warehouse them. As they age, scarcity increases, prices go up, and structured funds pay you out as the bottles move. It's not magic. It's supply, demand, and rich people's thirst for status. You are literally renting shelf space in their obsession. Here's the mechanism nobody tells you. Successful retirement investors don't obsess over what will the S&P be in 2040.
Does what you just heard make you want to learn more, to dig deeper, to ask better questions? That curiosity is exactly what separates people who understand finance from those who don't. Most people stop at the surface. You're going further. Let's continue.
They ask only one violent question. Who sends me cash while I sleep, and how likely are they to keep sending it when politicians torch the rulebook? Dividend stocks answer that. Alternative income assets like whiskey funds, music royalties, and private credit answer that. The index, that's a buffet. You can't retire on a buffet. You retire on a bill that gets paid. You want one concrete thing to tattoo on your brain today. Total return is a theory. Cash flow is a habit. Total return needs you to sell pieces of your future self to fund your present self. Cash flow lets you keep the asset and just live off the stream. That's the entire game. So what do you actually do with this? Again, not financial advice, but here is the truth. First, audit your future cash flow like a pissed-off landlord. If everything about your retirement plan depends on, I sell my stocks at a good price someday, you don't have a plan. You have a wish. Start listing what currently pays you. Dividends, interest, rent, royalties, side hustles. If that list is short and sad, fix that before you chase the next hype ticker. Second, learn the language of dividend quality. Ignore the 10% yield junk screaming, buy me. You want payout ratios that don't strangle the business, a 10-year history of not cutting the dividend, and actual free cash flow. Translation: companies that throw off more money than they need and choose to hand you a slice. The yields aren't sexy, the reliability is. Third, get curious, not drunk, about alternative income. Start tiny. Look at regulated vehicles that give exposure to weird stuff. Maybe a fund that owns aged spirits, or a listed trust that owns infrastructure, or a REIT that throws off 5 to 7%. Your goal isn't to flex. Your goal is to build a boring, relentless stream that doesn't care who wins Iowa or what tariffs the White House announces next. Final verdict: retirement isn't about a number. It's about a paycheck that doesn't require your knees. The system sells you growth stories because they're exciting and easy to package. Income is harder to sell, but easier to live on. So here's your 3-point summary. 1. The index is a popularity contest. Retirement is a cash flow problem. 2. High-quality dividend payers plus weird collateral-backed income assets quietly solve that problem while everyone doom scrolls. 3. Your job this week: shift at least 1 hour from stock tips to studying actual income streams you can own. This is not financial advice, but if your future self isn't collecting checks while you sit on the couch, you're not investing, you're gambling with time. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.